just give me $1 million and don't ask any questions and we'll get it done. And I'm like, how do those words even come out of your mouth?
I would definitely say our business is exhausting because it's ever changing.
I think you're going to find tremendous insight and value.
I've spent over $150 million with Google. It takes a village to make these campaigns successful. You have to do a little bit of everything.
Storytelling is such a big part of what I think is needed and what really sells the vision of a company.
The companies raise some money. They've started to execute. The stock's trading. Maybe it's not doing that well. And then they're getting kind of the large shareholders complaining in their ear. And they're like, oh no, I need to do something.
Good afternoon and welcome to the podcast. Sometimes in life we find that you've got to go someplace else to meet the people that are in your own backyard. So that's not necessarily the case here, but I had to go to Miami Beach to a conference. So from New York to Miami, in order to meet our next guest, Ty Hoffer, who came from Canada to Miami. And so I'm grateful that we both made that journey because we got a chance to meet. Ty is the CEO of a company called Winning Media. And for anybody in the audience that either is part of a public company, thinking about going public, or active in the public capital markets in any way, I think you're going to find tremendous insight and value from our discussion today as we pull the curtain away to see what sometimes goes behind the scenes in the digital marketing, storytelling world. And so with that brief introduction, Ty, I appreciate you joining us today.
Thanks, Seth. Really happy to be here.
So Winning Media. Usually I ask people how they got the name of their company, but I guess yours is pretty self-explanatory. But why don't you give us an overall view of what the company is and what you're all about?
Well, this is our 20th year in business, and I'm based in Texas. We probably have half our clients out of Canada. The other half are on the NASDAQ. And, our core services, we market companies at various stages, promoting their story and narrative to retail investors. Our business has changed so much over the last 20 years. We used to be so heavily weighted with email lists. I was so early to that side of the business. And then, these phones came around and spam filters changed and the economics changed. And now we've had to pivot our business significantly. And we always have to kind of stay ahead of the curve of how to reach these retail investors. Today, we're really an agency that manages marketing budgets where we're paid directly by the issuer, helping to really increase awareness around when they have a lot of material news, or maybe they're trying to do a financing, or they have some warrants that they're trying to capture, or maybe it's a brand new IPO. There's all sorts of scenarios of where Winning Media gets engaged.
And that's one of the questions I was going to lead with. But before I do, I just want to drill down on one thing that you said, which I think is very telling. And anybody who's been around public companies knows, just to be able to make that statement that you've been around 20 years is speaks volumes, right? Because we both probably know of so many individuals, companies, agencies, firms that are in and out and, one and done and gone after 2-3 years. So, the fact that you've weathered the storm for 20 years says a lot about what you do and the knowledge that you have. You've spoken about the issuer. Are most of the companies that we're going to talk about today, the different types of services and the insights, are they companies that are already publicly traded? Are they private, or are they private with an eye towards an IPO? What's the ideal type of company that will be able to implement some of the things we speak about today?
They're definitely already public. We might be working with a company right as they list. We're sector agnostic, right? I mean, I each year we'll work with companies that are in favor, where bankers are raising money, where deals are getting done. Here recently, gold has been really big, as this huge run up of gold. So we've had a lot of gold issuers. They've definitely kept us very busy. AI's been keeping us busy. Here recently, quantum computing. We always have biotechs. that are needing to raise money. Um, typically the companies are under $1 billion market cap. We might even work with companies that are, 25 to $50 million market cap. Definitely these early stage plays, where they need eyeballs, they need more volume, they need more shareholders, and we kind of help them break through the noise, how to craft the narrative, how to get out there on people's phones, on people's desktops, getting the symbol, just a lot more positive all over the space. So every project is totally different, but for us, it just totally depends on the stage of the company and what they're trying to accomplish.
It's funny you talk about storytelling and personally, I'm a big believer in that. I was just at a conference recently where the company CEO would get up there and present to an audience, and it's just mind-boggling to me sometimes how they get up there and all they're doing is just reading the PowerPoint presentation that's behind them or the Excel sheet with the financials, lulling everybody to sleep. Storytelling is such a big part of what I think is needed and what really sells the vision of a company. But that storytelling mechanism has changed drastically, especially over 20 years, even over the last 5 years, right? I mean, dare I say, even 10 years ago, like billboards and radio were the way to do it. How do you keep up with the time, so to say? And what do you think is the most relevant and effective ways to go about doing the marketing in today's day?
Well, I would definitely say our business is exhausting because it's ever changing. And, I remind these CEOs like, um, to stay on top of the best way to approach investors is not easy because it is always changing. And I think we got to give investors sometimes more credit than we do. They're seeing so many deals. They're seeing so many opportunities, whether it's reading on financial websites or getting them in their email or on social media. It's frankly a barrage of information. It's frankly too much, and it's hard for people to make decisions. We use a lot of strategies today, um, through the digital vertical, where we definitely target retail investors where they're tier we call it tier one investors, and they're on the best financial sites. Sites from MarketWatch to Forbes, Yahoo Finance, Google Finance, Bloomberg. That's where you want to go. And believe me, that is not easy to do in 2025. During the COVID days of 20 and 21, there was a massive surge of issuers that started spending money to tell their story online because we were all stuck at home. Nobody could do conferences. Nobody could do road shows. All the Canadian clients couldn't cross the border. So that was a crazy, crazy period. And I think it also is, this is a key point I want to make. I usually give like a Italian food analogy. I think there were a lot of people during that period that tried some type of digital marketing, and unfortunately weren't successful. Um, Kind of as you mentioned, the barrier to entry, if you want to be a quote unquote, digital agency is very low. Anybody can throw up a website and say that that they can promote your stock, just send me a couple $100,000 in a wire. Right. And unfortunately, there's a lot of people that get taken advantage of by these fly by night, shops. And I think people prejudge that by saying, "Oh, well, that doesn't work." That's kind of like saying, "Well, all Italian food is bad because I had one bad plate of lasagna." Right? We know that's not true, right? And not all lasagna is not bad. You might have just gone to a bad restaurant, that don't kind of paint the whole industry just based on one bad experience. That example, one bad plate.
You say, and I think, and if you could speak about that in terms of like the industry, right? If we're talking, and this is a very candid conversation, and anybody that's been in the public markets knows a lot of what we're talking about to be true. And if you haven't had this experience, then like use this as a heads up. But I'm always fascinated because over the, I've been at this 28 plus years as you have. There are from time to time these firms, not saying anything bad about them, but where they'll say to the CEO, "Hey, just give me even saying it, I'm laughing. Like, just give me $1 million and don't ask any questions, and we'll get it done." And I'm like, A, how do those words even come out of your mouth? But B, what type of intelligent CEO that has gone through such effort to become public is just gonna turn a blind eye and say, "Do what you got to do. I don't know. I don't want to know about it." So I think it's a question of you know how do you break down the different types of services? And I know that that's changed a lot, because I do think that there's a huge difference between organic storytelling, like you and I do on LinkedIn, versus paid, which is an entirely more effective way for some of these public companies. So, what are some of the details of the process that you guys offer or suggest?
Well, definitely not a magic bullet. And I always tell management teams it takes a village to make these campaigns successful. You have to do a little bit of everything, I mean, there are definitely things we don't do, we don't do road shows, we don't do interviews, like this. We don't do work on the phones. We're not an IR communications company. You pay 10 grand a month and hire for a year, but all those guys are important. All of those pieces of the puzzle are important. I'm definitely a big fan of getting together at companies, going to conferences and getting on the road. But when it comes to digital, it's definitely the fastest and most efficient way, and oftentimes as well, the most economical way to reach tens of thousands, if not hundreds of thousands of investors. We use the two big ad networks, Google and Yahoo, which power 80% of most financial websites. We use that to target investors. There's definitely some proprietary stuff that we're able to do because we've been around 20 years. I've spent over $150 million with Google. When you're a major account like we are, fortunately, we get to kind of play in a different sandbox. So we do get to play with a different set of rules. We get, better pricing. We're always able to get things through compliance. We're able to get them to scale. And that's a really, really big deal. Sometimes it takes companies, they have to go off and try to learn things on their own, or they want to hire their brother-in-law who says he can manage their AdWords campaign to try to do this. But it is very difficult today to, truly promote an individual stock. We use a lot of retargeting, which is something that advertisers use to follow us around. If you ever go to a website for the first time and then it's showing up on your phone later and you didn't buy something, but they're trying to get you to come back and offer you free shipping, or, come back for 10% off or whatever. That technique of retargeting is really effective when getting someone to put a symbol on their watch list, start to pay attention to the news, start to pay attention to the chart. And just like the old law of sales, typically most sales happen after 5 contacts. It's usually between the 5th and 12th contact. That's where you get the best type of investor that's making an educated buying decision. And those are the guys that we want. Not to say a guy may see one of our landing pages day one and they may go buy the stock, and that's fine. Sometimes people like that are emotional. They might be traders or flippers. Fine. There's a place for everybody like that in the market, but we're really obviously with our clients trying to build long-term shareholders, people that are drinking the Kool-Aid, they buy the vision, and they're really in this for the long haul. And I always call that's basic blocking and tackling when we're spending budget on a daily, weekly, monthly basis to build an audience for our client.
It's funny. It's funny because you said that, and I've experienced this also, where you've got a CEO or a CFO that's maybe looking to save a couple dollars, or the philosophy is, let me just ask my brother-in-law. He'll do my marketing for me. I've run into that with Share Media, our LinkedIn company, where CEOs have said, "Oh, I've got a niece in college. She knows all this social stuff. She'll take care of it." 9.5 out of 10 times they're back asking us to take it back over within a week or two. But at the end of the day, when they're working with you, there's a tremendous amount of professionalism that is required to do what you do. Not just because of that experience with like the 150 million and buying power and things like that, but anytime you're dealing with public companies and storytelling, at least in my mind, maybe it's the old lawyer in me that comes out. But you said this word earlier, is that scary word of compliance, right? I mean, at the end of the day, no company, I'd like to think, no company intentionally is going to do something that's going to, play with that compliance line. So, what are some of the flags that regulators might look for? When people do things fast and easy versus the way you're trying to accomplish it. Because I think at the end of the day, everybody wants results, but they also want to make sure that everything is kosher.
Yeah. Thankfully, knock on wood, we've never had a regulatory issue ever in our firm's history. We definitely have talked to regulators over the years that sometimes have questions about certain campaigns. But look, regulators are just looking for disclosure, and that's probably one of the most important things is disclosing what you're doing. And I think there's different. Some of the exchanges are more strict than others, especially if it comes to Canada. OTC markets can be strict. I think a big mistake that some clients make, especially some of the dually listed Canadian projects, is if you want to get on a regulator's radar, one surefire thing you can do is go hire a bunch of penny stock lists. If you do that, I mean, like literally by the end of the day, you're probably going to get an email. And
Do they really move that quickly? I mean, it's that apparent?
they're seated on all those lists. I mean, I used to be in that business years ago,
Right.
but it's just changed so much now. A lot of that is paid by third parties, and the regulators, anytime they see anybody on any of those lists, they always email the CEO, and the CEO, the company will typically have to put out a press release stating about promotional activity. They'll get flagged with a bullhorn on OTC markets, and there are very simple ways to avoid all of that, still play by the rules, and still be effective. But the general rule of thumb is disclose, 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 and you can't be too hyper promotional. Turn $10,000 into $1,000,000. You can't have any of that language. So it is about having a staff that has the experience about writers that know what you can say using public information and what you can't say. Right, designers that know how to design to where you're not going to raise eyebrows. So anyway, yeah, it is definitely a complex environment that we play in today, and you have to play by the rules.
And I'm curious because, although a lot of our listeners are capital markets guys, bankers, public companies, want to be public companies, some of our audience are entrepreneurs, startups that they want to know, well, like, especially for a lot of the guests that we've had, like, well, how'd they get to where they are today? Like, what was their journey? Certainly anybody that's followed me knows that mine has been complete zigzag from, law school to Edgar to stock transfer to LinkedIn to background checks. And honestly, I don't know how to do any of them, right? I mean, I literally do not know how to transfer stock. But I have a good team. I have the
Right.
best team. Tell us a little bit about your journey. Where'd you start from? Some of the pivots along the way. How'd you get to where you are now?
Yeah, well, my background's in marketing. I went to the University of Texas at Austin, and had always been in some type of outside sales business. And in Houston, I ended up meeting who would eventually become my mentor, a guy who had an incredible newsletter business and publishing business. He used to in the '90s. He used to work for Enron, and then he retired in '97 to start this, publishing this email newsletter out of his home, and ended up becoming wildly successful with subscription revenue. But he really wasn't doing any advertising, and so I met him and said, "Hey, let's bring advertising to your model." And then that's really how the whole business started. And started my first newsletter, which was another one, trade.com, and started growing that. And that was an incredible business for a decade. My mentor has since sold the business and retired, so we had to wind down that business. And as we started to get as we started to work with various advertisers, a lot of the Agora publishing divisions in Maryland, lots of different advertisers, we started to get some of the investor relations and investor awareness advertisers, a lot of guys that were wanting to promote stocks, they would reach out to us. And then I started to see there was a disconnect in that space. People didn't know how to price it. A lot of people were getting taken advantage of. I started traveling a lot more to New York and Toronto and Vancouver, Florida, and developing relationships there. And then eventually the business, probably after the recession of '08, our business really pivoted to primarily doing investor relations advertising.
You've been at this game for a very long time.
Long
Sounds
time.
like you pivoted from one to the next. Like you weren't a biotech engineer in another life, and then somehow, so this is in your DNA. I could tell.
Yeah, and now we're starting to use AI. There's a group in Austin that we're working with to incorporate a lot of AI into our business. So, I mean, it's exhausting. It's exhausting because you always kind of have to see around the corner. You have to be early. You have to know what's working, and I think also more importantly, you have to know what's not working. Right? You have to know what you're not going to waste money on. I mean, I could just think of like a recent example of I get clients that will call me and talk about influencers, and they're like, "Oh, should I use these YouTube influencers or TikTok influencers and this and that?" And it's so hard to measure what some of those guys are doing. There's a lot of fraudulent followers and bot traffic, and frankly, a lot of it's just not good value. There is some that's some value, but you also have to know, like, there were some regulators that decided to, kind of go after influencers, and it just the risk was just kind of not worth it. So that changed, here's a couple of years ago, and we kind of had to give that, advice to our clients, like, hey, we're not using that vertical anymore. We're moving over here and we're using this vertical. So, hopefully we're able to show the value of why companies are engaging us and
Well, I would imagine that when you have to see what's coming around the corner, at the end of the day, I'm curious your thoughts. Like a lot of the companies that go public or have been public for a long time have to come to a very strong realization that I don't care if you're in biotech or if you're in pharma or electric vehicles or esports, once you become a CEO of a public company, you are wearing another hat, and that is a full-time money raiser. I mean, most of the time that you just got to spend day in, day out, raising money, raising money, raising money. So from somebody in the captain's chair that you are in, what are any mistakes that people might make in going out and seeking that capital? Is there anything that comes to mind, or any success stories that, or any suggestions that you have? Because capital
well,
raising is a full-time job.
the mistake that I see, the common mistake I see is almost where it's too late. Where like the company's raised some money, they've started to execute, the stock's trading, maybe it's not doing that well, and then they're getting kind of the large shareholders complaining in their ear, and they're like, "Oh no, I need to do something." And sometimes they'll find me, and a lot of the times it's unfortunately it's too late. There's nothing we can do, or they can't afford us. And so that's the mistake is when you're raising money initially, you've got to carve out a certain percentage for marketing. You just have to. And usually, guys are a lot smarter than me. These bankers, depending upon the sector, will say to carve out anywhere from 10% to 20% of the raise towards the annual marketing spend, or at least to get them to that next financing. The mistake made is they don't do that. And then they get to where they're like, "Oh no, my stock's trading by appointment, or the chart looks terrible, or people are, there's not enough liquidity and people are leaving." And then the CEO is like, "Oh no, I need to do something." And then they come to me and I'm like, "Well, you can't afford me. You don't have enough money in the treasury." Or they'd have to, they're trying to move things around. Obviously they have payroll and operations and all these other things. So that's probably one of the biggest mistakes that I see. And obviously that's why we work with a lot of the same clients over and over again, because they understand the proper model.
The takeaway or the warning is you got to have money to make money, right? I mean, you can't go cheap on the marketing.
You, these guys have chosen to go public, right? They're a public company. They're not a private company. So if you're in the public markets, you've got to be open to spending money to tell your story.
Right.
And I always tell guys, like, if you don't believe me, there's somebody else that's going to. And so some guys, I was just on a call the other day, and a guy was complaining about one of his competitors whose asset isn't as good as his, and he can't believe it's a $3 stock and yada yada yada. And I'm like, well, uh, you know, they're they're just maybe telling their story out there a lot more, because this guy that I
Steve
was
says it is a full, and I agree with you. It is a full core process. It's digital. It's roadshows. It's social. It really requires everything. I mean, I think even 5, 6, 7 years ago, companies would go public. They put out a press release. They hope somebody reads it, and they call it a day, and it does what it does. That is not the case anymore. I do have a practical question for you, and I want to be mindful of your time. So as we start to wind down, um, I'll tell you a question that was asked to me. I did some research, and I'll share the answer, and then I want to hear the answer from you. Obviously, I do a lot on LinkedIn, and so I had an attorney that we work with, and he said, you know, he wants to, in his heart, he wants to post as much as he can on Monday morning because that's fresh out of the gate. That's when everybody is like looking at stuff, the start of the new week. But when we did our homework and our research, what we found is, at least from the statistics, is that the best time to post is Tuesday between 10 and 11 a.m. That's on LinkedIn. What, in terms of your world or PR, is there a time that is a best day, a best hour, a best strategy? What have you seen?
well, it's kind of two different things. One is if we're marketing on a given calendar week, usually we'll spend a little more money on Tuesday, Wednesdays, and Thursdays, and a little less on Mondays and Fridays. I mean, obviously, I can't tell a public company when to put out a PR, but I would say most of my clients tend to have more PR go on those days, Tuesday, Wednesday, or Thursday, with the conventional wisdom of by Friday, everybody's checked out for the weekend, and Monday they're coming back and they're catching up, and their inboxes are full, and they're playing catch up. So I think that's
That makes sense.
I think that's why. But when we look at media buying and spending budget on a particular day, I think and this is a key point I'd want to make to your audience. The thing that's so cool about the way that we spend budget is its flexible nature. And we do stuff today that we never could have done 10, 15 years ago, because we have so much control over our daily spend. So whether the president says the right thing or the wrong thing, whether the sector is whatever sector the client's in is acting a certain way, or the broad market is doing something good or bad, we can really adjust. And that's so powerful. Like, say it's a biotech company, and biotechs that day are just ripping, and everybody wants to look at junior biotech. They want more exposure. That's a great day to really be spending more budget. Conversely, if maybe Trump says the wrong thing and the market's selling off, or the Dow's down, or whatever, or there's a major news event, Paris event, or I don't know, something that happens where people are not paying as much attention to the market. So we throttle back, we save money, someone will spend $0. And by having that flexible nature, that nimble, way of looking at it is incredible. And so when I talk to CFOs, I'm like, look, this is actually, the because at my nature, I'm a conservative guy. This is where you're able to have so much more control over the risk of how you're deploying marketing dollars. And I mean, that's amazing when we
That's
be
awesome.
talking to clients about how to push the gas or hit the brake, kind of as we do.
That makes total sense. One other question that comes to mind, just because clearly like we said, you've been around a long time, you run a successful agency. People are always curious, myself included. What's a typical day look like for you? Or what's a morning routine? You're like, I'm always intrigued, not necessarily agree. Like, I spoke to the CEO of a NASDAQ company. He just raised $150 million. And he was telling me, I'm up at 4 a.m. I do the ice bath at 5 a.m. I'm doing prayers at 5:40 and I'm in the office but he says, but I'm in bed every day by 6:30 p.m. I'm like, well, that's great, but that doesn't really work for me. I'm just curious, like, what's a morning routine or a daily routine for somebody like yourself?
Well, my wife and I, we got 2 teenage girls, so appreciate your prayers. Uh, we're very, busy with that. So if that's still one I have to take to school, but yeah, we're usually in the I'm usually in the mornings, after some quiet time and, usually having to take, Olivia to school. I mean, it's all hands on deck when the opening bell is coming around at about
Sure.
30 minutes before. And then we're pretty busy in between market hours, and then after the market we can settle down a little. Um, but yeah, in the morning I try to get some quiet ins and reading, uh, you know, my spiritual path, because then I know the
The chaos sets.
rubber meets the road, and here comes a control chaos.
I got it.
At
Well,
night.
well, this has been great. And just remind us, the listeners, if somebody wants to get in touch with you, the website is what?
Winning.media is the website, and that's the best way
This way.
to go find us. I'm on LinkedIn. You can find me. Just send me a direct message on LinkedIn, and if you know Seth, I'm sure Seth can get you my telephone
Absolutely.
number, and you can send me a text. And
Absolutely.
happy to.
Well, we haven't seen each other at a conference in a while, so there's a couple coming up over the next 6 months. Maybe we'll bump into each other in person again. But I just wanted to say thank you for taking the time. I think this is really helpful, insightful. I think a lot of CEOs are always looking for I don't say the quick fix, the holy grail. What's gonna solve all their hopes, dreams when it comes to public market stocks. So I think that you've added a lot to that today. So thanks for joining us.
Thank you, Seth. Really appreciate you.